Tesla's close over yesterday's high is pretty significant, and there were several interesting developments today. To start with Tesla, you can just see really clearly here you have a doji down, and that doji is reflective in these two wicks. We know that wicks are price rejection. No matter how you cut today's action, we flipped over that. Now, a lot of people are looking at this market and predicting the next leg down. It is possible, and we're going to get to the indexes at the end. You had some really good economic data today that I'll go through as well. But if you're looking for this to just be very simple, it's not going to be that simple. So when you see something like this starting to set up again, you might want to pay attention to it. We flipped this DTL, and then we got above it, below it. Usually have 3 days to get back, 3 to 5 days, and now you're back above it again. You're not at a previous close from the CPI number, but that is a heck of a move today on Tesla, where you're really looking at the open was the low of the day, and then we just pushed. I actually had some options and stock on this, and when it got through, it looked like it was going to push, but then we had a little bit of an issue, right? We had the Berlin factory and that news that they may have to shut down a little bit on that plant. So that's definitely, or something along the lines of the expansion is going to slow down. Something to that extent set us off course. In regards to it, we'll see how it plays out. I really don't know how that news plays out, the significance of that news. The news that's coming from overseas is changing on a dime, but technically speaking, this is setting up again. So to me, every single time that these things look like they're about to break down and we're seeing these H patterns break, you're just rallying right back up. So if you see it get through these levels, 304.53, 305.49, you're probably going to want to pay attention to this. LNG rocketed today. You can see where we closed, and look at how we just got over that line. So we closed at 174, and this looks like we're setting up for higher prices. If you look at the monthly, you can just see the trajectory. It's just been on an absolute tear. I don't see any reason for this to stop, quite frankly, until they have some kind of solution for what they're going to do in regards to sanctions. And quite frankly, after that, I don't even know that that's going to fix their issue. Just watch how you act at this 172.45 level. HKD is worth noting. You see this huge move up again today. Everyone's predicting that this might happen again. I don't know if it does or it doesn't, but you're definitely seeing some volume come in and some of the same shenanigans we saw last time. You can obviously just see how just complete utter buying coming in, driving it higher, forcing it higher, stop after stop, and then finally you come back down and wind. If you get above this wick again, you probably could go again. So I would have it on my radar if you like playing the speculative ones. Just understand that eventually there will be the music that will stop, and just don't be caught without a chair. But could it go again? Sure, why not? I mean, GameStop did it. AMC did it. If people want to manipulate a stock, they can do it. And it seems to me that that's exactly what happened here. And it seems to me that that could absolutely happen again. To think that it couldn't, it's just silly. Of course it could. We're starting to see some of the old names in energy rally again, and I think that's pretty important. So I'm just going to leave this 50 in so you can see how we ran that the whole way up. And then when you broke it, that was kind of the end of it, right? So that's pretty pertinent level, and you're holding right in here. I really don't see a solution to this, and we saw that with the LNG chart. I just don't see what the solution is going to be here. So I do think that you're going to see these names rally into the winter. We did see natural gas at one point up 10% today. We did see crude oil rally back over $90. So there definitely are players out there that are buying oil and are buying natural gas futures. So keep this in mind. This would definitely be on my radar for tomorrow. Obviously you want to see if you can get over that little doji right there and then see how it goes from there. Now, when you have a incline 50, so in other words, you see how your slope is pointing up, that's pretty significant. It takes a long time for that to develop after it came down the whole way, right? So it's not something to take lightly. And what you're seeing is you're seeing these undercuts, people are panicking, and then you're just seeing rally after rally. Even on snow yesterday, all day buying right at that core level, that 181.15, rallying today. And now look at this close. The close on this today is 198. If you go back to where we have this little hangman doji essentially, and you take a look at that, you're over that previous close. So the market's down precipitously. and Snow's closing at a new high. And I think that's really important to kind of get your head around. So if you look at that particular sector, there is this misnomer, and I went through this on the pre-market live stream today, and I will link that pre-market live stream at the end so you can listen to it if you like. We do it every morning from 8:30 on. So the point of the morning is just to set up the pre-market live stream for what's going on in the day. And the one point I really tried to hammer home with people today, everyone's just, oh, we're going to break down, we're going to break down. And could we break down? Yes, we're going to get into the indexes in a moment. What happened? There was one point today that I thought we were going to break down, and we just didn't. So it's a very tough market. So what I would suggest you do is don't try to predict that you're just going to simply break and go lower. You don't know that. Nobody does. Okay. And you can see this with software in general. We're not really breaking down yet. Okay? We're kind of bouncing around, but names like Snow, they're hitting highs. They're closing at highs. So why everybody's panicking here and talking about, that the sky is falling, I think you need to just kind of be aware of what's truly going on out there. Now, today's economic data was really good, and it's definitely something that I would focus on. Now, by really good, I just mean that it did what it was supposed to do. In other words, PPI month over month came in negative 0.1. That was the estimate, negative 0.1. So this is exactly what you want to see, right? You want to see that they actually have a clue. 3-star denotes what is most important. This is investing.com. Anybody can get this. It's a free site. I tend to use free sites here so that you can do this yourself. But if you're seeing things like this happen and you're seeing the PPI come down, which is actually the cost of goods, then we're in good shape. That fits yesterday's video when we talked distinctly about how that was all housing that was in CPI. It doesn't change the outcome, but understanding the nuances will help you invest. So if you're struggling right now, I'm just going to be blunt. You're not alone. I traded through 2000. I traded through 2008. We were talking about this in the trading room today. This is by far one of the toughest markets that I've ever traded in. And I think anybody that's been trading for a long period of time is going to suggest that. There's a real macro view going on here, and there's a real network of not only the inflation data, but what is going on overseas and how that's affecting us. But you're seeing a tremendous amount of games where, of course, you're down, right? But then you come into today, looks like you're going to break, you don't, form a doji, pops over, bullish engulfing, right? Looks like you're going to run, forms a flag, breaks the flag to the downside, looks like you're going to break down. Okay, I actually put a hedge on right here, puts. All right. And my goal when I did this was to tell myself, okay, I'm going to put half on now and then half on at the close. Then by the close came out, I decided not to do that. The reason I'm saying that is in this kind of environment, if you're struggling, you might want to think about starter positions and staggered stops. Those kinds of things have been working quite well in this market because you're seeing a lot of this. You're seeing a lot of triggers and then they're not going. Now, where does this leave us? Well, in regards to the SPY, where this leaves us is with this doji, right? You basically have the definition of a long-legged doji, an undercut right here. And if you really want to get super specific, flipping this level, you have this bullish harami. I will link that video at the end that explains these candlestick patterns I just went over. If you can flip this, you can get back up to this 403 and go from there. I actually like the position that you're in with the market because you're going to get a decision here. And that was kind of my point. If you get up to this 411 and clear it, you're in great shape. If you break down here, more importantly, that 390 level, then you're going to have an issue. And if we know where those levels are, then we can make more informed decisions about them. And I think that's what's significant. So it's not a be-all, end-all. It's not a guarantee that if you break here, you're going down. But at least it will give us the direction. And I think if you take a really hard look at what's going on, that you're going to just see some things pretty clearly. To start with, this is getting tighter and tighter and tighter and moving faster and faster. That's usually the sign when you see that kind of volatility that something's going to come up. Now, there's one thing I do want to leave you with. This is the 10-year Treasury. It's the 2-year, 10-year line. And essentially what it does is it just takes the disparity between the two. This is the zero line, okay? So right now the 2-year is at 379. I think the 10 years are around 340. Okay, so right now you have you're actually getting paid more to have short-term than long-term debt. Okay, when you see this and you see these levels, it usually leads to a recession. The Fed is fully aware that this is a problem. And if you think that they're not going to do something about it in the future, they're not going to have a choice. The market is a discounting mechanism, so we're always looking out into the future, right? So the reason we started dropping down here was because we knew that they were going to raise rates and unload their book onto the market. We know going forward in February, March, based upon this Fed, that they're probably going to overshoot. If they overshoot, they're going to have to be cutting rates by February and March. That's what that inversion is telling you. Okay, so that's why you may see this still be very negative, and it is possible for the market to bottom. No one has any clue exactly what is going to happen. I'm just trying to give you the little pieces so you can make your own decision. So I hope you find that very helpful. Any questions, reach out. Let me know. I did discuss doing more macro work. If that's of interest, let me know how you would like to do that in the comments, which way you think I should go with it. Any feedback is helpful. That's why I create the content. If you are interested in the trading community, there is a link here in the top right corner. Everybody have a great evening and trade to win tomorrow.